Oklahoma State Extension Livestock Marketing Specialist Derrell Peel is our cattle market analyst this week. Last week's USDA reports on grain stocks and planted acres have weighed down corn prices. While that provides a cheaper ration for feeders, the amount of money they'll have to pay in order to buy the animals to put into feedlots remains high. We talked with Derrell Tuesday morning about these profit margins, selling this year's calf crop, and drought effects in Oklahoma and Texas.
You know, over the last month or 6 weeks, we've seen some relief across much of the region, that some of the hardest drought hit region. We've moderated those drought conditions. We still have drought conditions. They're less severe at the moment. The challenge I think we have is that it's the middle of summer now. We've got summer heat in place, and so it's going to be very difficult to continue to get enough moisture and make improvements. I think it's probably more likely over the next few weeks that we will actually go backwards a little bit on these conditions. But the good news is that in late May and June, with the rains that came, we have produced some summer forage and some hay production. That's going to do a lot to help producers get through this period and at least get us into the fall.
Has that drought made a long-term change in either cattle feeding in Texas or in production of your region?
Well, certainly the numbers are way down. The drought was most severe going back to 2011 in the southern plains. And if you look at the numbers today, Texas, for example, is down about 1 million head of cows. Texas, Oklahoma, New Mexico are all still down. That's been reflected not only obviously in cow-calf and stocker production in the region, but we've also seen some impacts there in feedlot numbers. For much of this year, Texas has had reduced numbers. This last cattle on feed report, Texas had fairly large placements. But the bottom line is, I think the cattle feeding industry in the southern plains has been affected not only by the drought, but probably by some longer term structural issues as well. And I think there's an indication that probably the overall share of cattle feeding in the southern plains is changing a little bit over time.
Both live and feeder cattle futures are at record high levels. What would cause a drag on either of those markets?
You know, we've got prices at record levels in both the cash and futures markets, and I don't see a lot of downside risk in this market. It's pretty scary to think about being at record levels and suggesting we still have even potential to go a little bit higher, and yet I think that's probably a greater possibility at this point than any significant decrease, at least in terms of cattle industry fundamentals. Certainly some shocks could come up, but with corn markets looking very favorable from a cattle feeding perspective, other factors in place, it looks like we can sustain these record levels. We have potential to push even higher. We've seen a dramatic decrease in beef production in the first half of the year, and we may see a little bit of seasonal increase before the summer's over in terms of cattle slaughter and beef production, but we're going to be down sharply for the year, and that's going to continue to support these prices near record levels.
Well, cow-calf producers seem to be in the driver's seat, especially in states like Nebraska, where we have received a lot of rain. Are there any considerations those producers should take into account before they decide to sell those weaned calves?
Well, I think, as you said, cow-calf producers are definitely in the driver's seat, so it's kind of hard to make a mistake that's going to cost you at least a lack of profitability this year. We're anticipating on average that cow-calf producers will enjoy record levels of returns in 2014 and 2015 as well. So it's pretty easy to be somewhat successful in this market. Having said that, I think cow-calf producers still need to take advantage of the opportunities here. There's obviously challenges in managing cost of production. Those factors are going to continue to push up. There's still opportunities to add value to these calves by not just selling them at weaning, but preconditioning programs or retained ownership programs, especially through the backgrounding phase, to put on additional weight. All have value possibilities that producers ought to at least evaluate before they make a decision on how to market these calves. One other consideration, obviously we're in a situation where we're trying to retain heifers, not only this year, but for the next several years. I think thinking about how to market heifers maybe differently than steers is something to consider this year as well.
Finally, Derrell, a big concern that remains is the cost of meat. Have producers shown that they've been blinking at the current price levels?
You know, maybe it's a surprise to a lot of folks that demand has held up so well so far this year. Both domestic demand and the international demand appear to be very robust. They're supporting these prices at this point. We're certainly in uncharted waters in terms of this level of demand with the reduction we've got in quantity in the market. Prices are rationing that limited supply, but at this point in time, the demand is holding up very well. There seems to be no real indication of, the kind of consumer pushback that will really fail to sustain the markets at the levels we're at. It's sort of a so far so good kind of a thing. Certainly we will continue to monitor it as we go forward, but it looks very promising at this point in time. There's the beef industry. Beef demand is certainly getting some help with higher pork prices, and poultry prices have come up somewhat in recent weeks. So, meat prices are high across the board, and consumers will react not only to higher beef prices, but to all meat and all protein sources at the same time.